sell out given the growth of that second market. All that being said, once they got to at least 500 investors, they were going to be forced by the SEC to make certain disclosures. It didn't make sense for them not to go public, not to mention it was always going to go public someday. The question was, it was in no hurry.
Yeah.
Right. Kramer, I know you're still on the phone.
Yeah, I'm getting nervous. Because I fear that people are saying, hey, it's not open yet, I can still get in. Let me go place a market order. The least sophisticated people are taking action right now. Once again, I think there's going to be another moment to be able to buy it. You don't need to forget. You don't need to be at the opening. Please, be tempered.
Be tempered, yeah. And of course, we've learned the lesson. We've seen what happened with the LinkedIn IPO, which doubled on the first day of trading on May 19th. It doubled, and then when the lockup expired 10 days after that, it traded all the way down to 59, which is the low on the stock. It's since recovered, but that just goes to show you that there may be other entry points. There may be other entry points out there once the lockups go. And Gary, is this different though? Because there is a point to be made that this is such a large holding that people will have to hold on in order to just sort of be benchmarked, and it is a core holding as opposed to a lot of the other IPOs that have gone to market.
As you and I know, there's always that fear of not owning something.
Right.
No one will ever come and admit it, but there's also going to be that element of, I better own some of this just in case. And that will obviously play a role.
Could it be the next Apple when it starts to gather momentum 2 or 3 years down the line on that huge user base and the revenues? They can
let's throw out those numbers. Simon, we were chatting about this earlier. David, listen to these numbers. Melissa, I asked one banker who was involved in pricing this deal, how is the stock cheap at 38? And this was the answer I got. If you take all the users on Facebook, the 900 million users, you take the valuation at the IPO pricing of 38, this is why it's cheap. It values every user at 10 cents, a dime per user.
Between the revenue per user, the average revenue
Not
per
revenue,
user.
just the average.
Right.
That's going to be one of those metrics you're going to hear a lot about.
That's not him.
Taking a dime for every person in the world who is on Facebook as a user.
Carl? Yeah.
That was a long time ago.
One of the strongest empirical arguments on the bear side is revenue per user. $5 for Facebook. For Netflix, it's $148. For Google, it's $30. So you can slice these numbers a bunch of different ways. I mean, on the bull side, you might argue they have 48% of the worldwide internet population. They have 0.5% of worldwide ad dollars. So, I mean, look, those are going to get parsed in various ways long term. Has zero to do with what it's going to do when it opens in the next few minutes, potentially.
Yeah, and right, Carl, listen, not to mention $3.7 billion in 2011 revenues, incredibly high operating margins. I mean, operating margins like you just don't see anywhere else. They may come down a bit. And still a very significant growth rate, although people may have been concerned a bit about the seasonality that we saw in the business quarter to quarter, certainly fourth quarter to first quarter in terms of Facebook. And let's not forget, there is an overhang here, 91 days, you can have a lot more shares out there, lockups up, and then 180 days, you could have as many as 2 billion shares out there trading every day in terms of at least available on the float.
Still, despite all the caveats out there, within the NASDAQ market site, there is a celebration that is waiting to happen when that first trade is made. The champagne is poured, the glasses are out, and we're just waiting for that first trade to be made for the people here, not us, but the other people here to take a sip and celebrate. And Jim, that really puts it in perspective because, yes, it is a stock, it is an investment, but right now, Facebook also embodies a lot more than that.
Yes, that's true. Can I just say that I'm getting a little embarrassed here? I mean, 11 o'clock, let's get a little precision. This is indeed still a capital market. And you say you're going to do it at 11 and 11:05, and all this does is make me feel a little less certain again about what's happening going to the Apple reverse from being up 11 to up 8. I like all the ideas that people say, and if you keep saying that I don't have to worry. I like what David said about the gross margins. Obviously, you as the user create the content, they don't. I come back to this the mobile strategy that has not been articulated, the notion that as great as it is that you want to get all this information, if Sprint, if Dan Hesse is right, the CEO of Sprint, the government will not like the level of violation of privacy. Obviously, there's a lot of companies that push Facebook badly. Not everybody's in love with Facebook. There's some competitors. Let's just keep these in mind as we go crazy if we buy it with no limit at the opening, which is the way, of course, you can. You can just tell the broker, listen, I don't care, just any price you want. And that's what I'm trying to do.
Wow. Yeah. Carl, this is Gary. I think you're trying to get to me.
Well, as someone who knows the street,
yes.
I have to ask you right now, what do you think's going through Greifeld's mind at this very moment?
I think he's a little bit concerned that they had put out a time call and that they're not adhering to the time. I think, and I'm just reading
it's stupid. So they're pretty much spending the time to allow these last minute fucking brokers to buy stocks.
Selling that's come in at the last few minutes.
They wouldn't do that with any other
open this at the right price.
Stock.
That's what I've been told.
Because we saw the 42 that's attracted selling in.
That's right. Once you get closer, Simon, to the actual print,
so more people
a number of people
Yeah.
may have been sitting on their hands in terms of, okay, let me see where this thing is, have come in.
Does that imply that we could break 38?
So you shouldn't even allow that.
There are people that think we may, Melissa, is going to be very, very surprising. I would say, David, you'd be surprised, right?
Oh, I would be shocked. You'd be
shocked.
The Incase bid would be for what's the third largest IPO of all time? What the highest profile?
I can't imagine. There are those that feel that. I can't imagine that's going to happen either. But
and guys, it's Pisani. I would point out it's not Greifeld's call right now. This is the underwriters' call. They're all sitting there, all 33 of them, with their ears to the phone, saying, "Okay." And the reason it's late is they're still getting orders in. Now, I still believe that the traders I talked to yesterday, their rough guesses with this would open in the 50s. If it's going to open around 42, if that's the case, I think there are market hunters out there that are putting in orders at this point.
We should know, in terms of the scene here at the NASDAQ market site, previously we were talking about Bob. He was hanging out because I had listings here at the NASDAQ, the man responsible for bringing Facebook to the NASDAQ. He came back in with a champagne glass in hand, along with the CFO of the NASDAQ OMX. They have since left the room. What that indicates, we don't know, but that's the scene here at the NASDAQ from where we are broadcasting now. So, still waiting here, Gary.
Yes, and I'm just sharing something with David here. I mean, retail, we talked about retail orders being filled. I mean, I can't recall, David, do you recall times where people put in for X amount of shares and they actually got
on a whole share or close to it? Yeah, not in an IPO of this type, of this size, with this excitement and the expected premium.
And I think that's a lot of what's happening right here.
Yeah.
And guys, you see the headline now. Wall Street Journal reporting the traders experiencing problems changing, canceling their orders ahead of the Facebook IPO, again attributing that to the Wall Street Journal, the first bit of clarity we're getting into the problem.
Hey guys?
Yes, Jim.
I don't want to get all the shares that I asked for. The only time I've ever gotten all the shares I've ever asked for is when I got my head plastered. I mean, I like to hear that I got maybe 40% or 30%, but if I get 100%, that means, holy cow, man, there's just a lot of supply.
Jim, you and I have been through this for many, many years, right? I mean, it is startling that I'm hearing from some small institutions, should we call them, that they actually got 100% of their allocations when you look at the whole distribution.
Well, those are people who may not have the ability or the discipline to say to people, listen, I don't want you to flip it. I mean, when I was on the Goldman side selling stock, I used to tell people, listen, don't get me in trouble, don't flip it. Yeah. When I was a hedge fund manager, or the guy who reviewed the account, saying, hey, Jim, I'd like you to be a long-term forward. What discipline do these people have? They're like, hey, take the money and run. It's like a Steve Miller situation.
Right. We should note that.
Hey, Jim,
sorry, Carl, just a reminder here. We're about 21 minutes past the time at which we had expected Facebook shares to start trading, as we are getting this headline from the Wall Street Journal about orders, difficulty with orders being changed or canceled ahead of this IPO.
Of course, we were supposed to have a lot of
Jim,
information.
I hope.
Sorry, carry on.
I just wanted to ask Jim. People were joking around this morning in a sort of dark humor way about bats and bat software and the experience we went through just a few months ago with their would-be IPO. Jim, is there a possibility this could be related to some software that is related to bats?
Oh, Carl, I hope not. If there was ever a time not to be the amateur hour, it's right now. This is the kind of thing that I don't want to see. I mean, I thought that if you weren't prepped for this one, when are you going to be prepped? I mean, I have to, we all must hope that it is just an influx of market orders at the end and nothing more than that.
We should note here that, as you can imagine, Jim and Carl, the tensions are pretty high here in terms of the delay, and as we understand it, NASDAQ officials are actually on a conference call, not a media call, an internal conference call, presumably, to figure out what is delaying.
We should also emphasize the magnitude of what has to happen here. This is a huge, they've run rehearsals, they had extra rehearsals, they knew that this was a tough technological feat to pull off.
What they are saying now is that this is a good, this is what is being said. It's a good thing that we're delaying it because we want the match to be good. We don't want to have people that had put in, Jim said don't put in market orders, a lot of people unfortunately did. So if you're going to put in a market order, you want to be certain that market order is filled as close to the actual opening on the buy side or sell side, and I think that's what's happening here.
I'm also hearing that there are a number of brokerages that deal almost exclusively with retail,
right?
Likes of a Fidelity, for example. And from what I'm hearing, communication delays are nothing like they've ever seen. And so that may also be playing a role here. I'm being told, in fact, it means that they're not able to make the allocations, that they're just not being able to communicate, I guess. I got to find out more. But if you wouldn't go to at least why this
if you put in a market order, let's just use Fidelity as an example. If you put in a market order in your account, you want to buy 10,000 shares on the opening. They're very worried that they're not going to be able to execute that for their clients at the opening print. So that's part of what's happening here right now to make sure that all the orders that are market orders, despite the fact that you've been advised not to do it that way, are going to be executed at the right price.
Hey guys, let me just break in and tell viewers, if you're just joining us this morning, tuning in to see where Facebook started to price, we were expecting the first trade at 11 a.m. initially. NASDAQ later said it would be 11:05, then 11:15 Eastern time. Of course, we're now closing in on 11:30 East Coast time, and still no trade has begun. The Wall Street Journal is reporting that traders are having problems changing or canceling their orders ahead of the Facebook IPO. And then, of course, Julia Borston here with me in Menlo Park. There's the added question about what the mood is like inside this campus that we're on right now.
Well, I think there's a huge amount of excitement when Mark Zuckerberg and Sheryl Sandberg rang the opening bell at 9:30 Eastern. But from what I understand, soon after that, the crowds kind of dissipated. A lot of people left. We saw a lot of people driving out to go home because they'd been up all night doing the hackathon, and a lot of people sort of headed back to their desks. So obviously, a lot of people in there are very invested in what happens once that stock starts trading. But I think they're watching it from their laptops, and the mood is pretty calm in there right now.
Guys, apparently we could have it at any moment now. We've just got a flash coming through from NASDAQ. It will be at 11:30, so within possibly the next 3 seconds. That's what's just hit the wires. It could be now.
11:30 right now, guys. 11:30. That's what the headline said. We should expect the first trade at 11:30 a.m. Eastern time. It has passed that mark so far. Still
but it's an indication they still believe they're on track. It's just a delay rather than a problem that could...
And we are,
there we go, look.
There we have
there it is.
Opening for trade.
42.
43.
$43 a share, up 13.1%.
So we priced at 39, priced at 39, open at 42.
$38 a share. And now, as you see it right there, $42, and let's call it 43 was the opening trade on Facebook. It might have been $42.90, I think, where they actually opened it.
I think it's $42.05.
Was it $42.05, Bob?
That's what I have on my bridge machine, $42.05.
It was, and we see it, well, now it's there. Now it is officially a public company available for anybody to buy shares should they desire to do so.
And we should note the champagne is flowing here at the NASDAQ market site. We do have some officials joining us here within this fishbowl from where we are broadcasting, including Bob McCooey and our guest,
Hey, so you can't still buy it?
America, just toasted, actually.
You can buy it?
Jim, 42.43. What do you reckon? 42.43.
Look, it's not bad. I mean, obviously, I think that the volume's only 85%. I would have expected
we'll buy it at 38 whenever it's at 38,
there's
right?
not a lot of flipping going on. I think that's positive. It's a nice bump from where it did come public. But I got to tell you guys, if this thing goes below 40, it's going to bring out sellers, not buyers. That's my level to worry about the sellers coming in, not buyers.
Hey, Jim, when you're taking a look at how this thing trades in the afternoon, I mean, it is 11:30. It is the European close, we should note. We closed at the lowest levels of the day in Germany. Will that have an impact on the rest of the day in terms of how FB trades?
I think that if we see Apple go negative, okay, if we see gold reverse, gold's been going up, usually a sign that maybe something big in the works positive over Europe, then what will happen is a lot of the institutions that got stock will say, you know what, I'll revisit this thing on Monday, because that trade's been going on for some time, which is like, let's lock some things
that's
in.
what it is at 38.
Probably nothing good happens over the weekend, something bad, and it's a different trade. So yes, I expect selling, not buying, just because of look for it.
Meaning they'll watch it for the whole day.
Okay, 42 million shares traded in the first 30 seconds. The 4201
was selling orders came in. There was more selling once you got the initial indication of the print. Remind me, guys, where were we at?
45 is where our first.
I think it was 44 was where we went out. We went out at 44, and then we started to get then it went down to 42.
No, 45 at first. 45 was the first.
The initial sort of lockdown brought in selling. And I don't think, and David, I don't think it was retail selling.
82 million shares in the first 30 seconds.
Some of the biggest brokers in this country, that retail just wanted to hold. They said they wanted to hold. They said they wanted to hold, and you see where we are in terms of. I think we're at the low print now of the day.
I'm curious what your thoughts are, Gary, in terms of Facebook sucking the oxygen out of the room. We mentioned this earlier in the show, but as we are sitting here, technology overall is weaker. Apple has turned around, is paring its gains for this session, and we are seeing a lot of large cap technology down for the day.
Well, forget Facebook. It's been a terrible week. The news associated with everything this week. We were, obviously we're focused so much on Facebook. Europe had one of the worst weeks that we've seen going back to the fall of last year. The JP Morgan news, I guess JP Morgan's probably a little bit happy about what's going on Facebook, because the news that came out last night, in terms of the size of this book, everything else again being equal, very negative.
There was a time when we thought that Facebook would re-enliven the stock market.
Yeah.
The headlines tomorrow on this are not going to be spectacular. It's not like the other IPOs where, the headlines were phenomenal, the pictures were phenomenal. This is for market sentiment after a tough week. This is not great.
Simon, I can't believe this thing is going to trade back to 38, but as David said, if these people that are telling me they think it will are right, then it's going to be a very, very different narrative.
And how wrong to suggest 39 then, yesterday, when they were right at the end when they were going to try and raise the price. Well, only wonders what they were told in response.
38, listen, it looks like they priced it very well.
Yeah.
Stock, the big story is Facebook, a social phenomenon we haven't seen. As Bill Gurley said, a company that comes along once every 10 years in Silicon Valley is now a public company.
And
that's the big story. The smaller story tomorrow, or perhaps right now, is that on its opening, it's after trading for 5 minutes, it's only up 6%.
The capital market story for me here is that I do not recall seeing the type of allocations that people put in for that they actually got them on this deal, David.
I believe we want to go to Kayla Tausche back at headquarters, who's been on the phone this morning in light of the trading delay. Kayla.
Yeah, Melissa, I just want to comment on the levels that we're seeing trading right now, up about 6%. And the sources that I spoke to this morning who were on the deal were saying this is going to be a reasonable day of trading. They're aiming for a range of 5 to 10% to the upside, because GM was the last deal of comparable size like this with a comparable retail allocation. That traded 500 million shares in its first day and traded up about 5% on that opening day. They're expecting something a little bit bigger than that because of the retail interest and the name recognition of Facebook, and of course it being a tech company, and you see higher volume associated with those stocks just on the face of it, but they are expecting it to trade within a 5 to 10% range from the expectations I'm hearing from some of the underwriting sources.
Oh, yeah, that means they certainly priced it well, and it would seem, Kayla, in a lot of ways. But, I think watching the stock trade right around the $40 level, one has to admit that's a surprise, given at least what seemed to be a huge demand out there in the aftermarket potentially. And it's about to break false. Yeah. It's about to break down.
I mean, I think that if we had to place prior to it opening, if we had placed wagers on where this thing would be trading at this time, however many minutes in, the only person who would have won is if Price is Right rules govern and somebody said above. Because I don't think anybody would have thought $40.
20 minutes ago, when I showed you this note that a number of professionals who were selling right at the open expected this thing to test and break the syndicate bid today. I think I was a surprise, Melissa. You know me.
Yeah.
When I looked at you,
my jaw dropped when I saw that email. That came in.
And we'll, again, this is you get to these equilibrium points right now. If you really love this thing at 38, you're a mutual fund manager. You're probably looking at the number right now. You say to yourself, I don't want to be the one to go out there and put a bid in for 2 million shares at 40. But you sort of say to yourself.
So if we come back to this active campaign that the CFO had to increase the amount of shares that were put on the market, that were priced last night at 38, what do we now make of that? Is that an indication of negativity because so many sellers sold out? Peter Thiel springs to mind? Or do we actually say the CFO's done a great job in putting those extra shares on the market?
Let me just answer that real quick. Forget the name is Facebook. If you go to a venture capitalist investor and you say you can monetize your stake in a company at 20 times projected revenues, you want to hit that bid? Forget the name is Facebook. That venture capitalist is going to hit that bid every day. So when they have the opportunity to sell more shares, of course they did.
I want to go back down to Carl in Menlo Park.
Well, although we're here in Menlo Park, I just think the most interesting shot is right there in Times Square. I mean, just from an optics standpoint, when was the last time you saw people in this country literally line the streets to see where a stock was going to trade? I think it's just a vivid illustration of the impact that this IPO has right now. Well, guys, I want to bring in our next guest, portfolio manager of the